Concerns are growing in the UK over the difficulty for small businesses to access export finance. According to the latest international trade survey commissioned by the Institute of Exports, two-thirds of British companies use their own funds to finance export growth, with 36% even using their overdraft facility because they cannot get the support they need from banks.
We have seen through the survey and through our experience as a consultancy, many profitable companies with strong order books unable to obtain finance, either because directors will not give further guarantees of security, the banks want more capital injected because it doesn't hit the tick boxes, and often going through the hassle, directors find it's better to go to family, friends, wealthy individuals to fund their business, and this came out in the report.
Industry experts believe that it is the regulatory framework surrounding trade finance that is making it difficult for banks to support SMEs.
Basel III is going to put the same restrictions on trade finance in terms of regulatory oversight and therefore cost that they have currently on other areas of the business. Ultimately, when it comes to their capital allocation and looking at the returns that they provide, it becomes increasingly difficult for them to support smaller businesses.
The survey also reveals that government schemes launched by the UK to promote an export-driven economic recovery are not used to their full potential by exporters, with only 42% of them aware of these services.
The Export Finance Guarantee Scheme handled by BIS does not appear to be working. The UK export finance schemes, as I said a moment ago, haven't got traction.
Half the battle really is getting the banks to be aware of these new products and services and what they can offer their clients.
You're not going to get any traction until you can actually bring these schemes to life. You can actually bring them to life with real deals and tell people actually how the schemes can work, what a difference they can make.
The country's export credit agency, UK Export Finance, launched a range of products directly targeted at SMEs last year, but has failed to attract interest from businesses, with only 6% intake since 2011.
We've had quite a lot of interest, but we have not yet supported as much business as we would hope and as we would expect. So we're renewing and strengthening our efforts to promote awareness. We're appointing export finance advisors in each of the 9 English regions to ensure that business is not lost by UK exporters out of lack of awareness of the role that we can play and the assistance that we can provide.
In the meantime, companies are turning to alternatives such as non-bank financial institutions, and experts predict that other options could emerge if banks don't come forward to support British exports.
We've got access to funds, to the bond market, to other types of funding. We've got access to a whole range of raft of financing measures without relying on the banks. What we don't want to do is to pigeonhole everybody and say it fits into this box. What we need to be looking at more closely is the fact of what are those needs, what is available from the banks, how can we tie them together to fit. Case by case, very much so.